Hello and welcome to Designer Market Update. Today is Wednesday, January 15th, 2025. This is a special episode of Designer Market Update in the sense that what I'd like to do is really focus on Bitfarms. And very specifically, I'd like to discuss the comments that were made by Ben Gagnon, the CEO of Bitfarms, during this morning's presentation at the Needham Growth Conference in New York City, New York. And what I'd like to do is actually begin very briefly with some comments that Ben made in an interview that was conducted by, I believe, the Mining Pod, maybe about 2 months ago or so. I'm going to kind of try to get comfortable here because we're going to kind of get into a little bit of detail. So, in the interview that Ben did with the Mining Pod, he mentioned something that really struck me as being relevant to talk about briefly, right? To then set us up to discuss what Ben spoke about today in New York City. So I'm paraphrasing here, but Ben basically described how Bitfarms, right? It's one of the oldest publicly traded Bitcoin mining companies, and how really the landscape for publicly, traded Bitcoin mining companies has really evolved and changed over the past, say 3 to 4 years. So what Ben pointed out is that, hey, say maybe 4 years ago, 5 years ago, to the extent somebody wanted exposure to the price of Bitcoin and didn't want to actually buy Bitcoin, a Bitcoin mining company that was publicly traded on a major exchange like NASDAQ or, the New York Stock Exchange, whatever the case may be, really provided that quasi-exposure, right, to Bitcoin price action. And as time evolved, and by the way, he pointed out this is really important, at the time, the SEC was very reluctant to want to approve any sort of publicly traded, right, exchange traded fund for Bitcoin or anything like that. So you really just had an investment landscape that consisted of publicly traded Bitcoin mining companies for the most part as being the proxy for the price of Bitcoin. You also then so that's how it kind of got started, right? And you only had a handful of publicly traded Bitcoin mining companies. But then the number of publicly traded companies began to grow, right? So you went from maybe a handful to a dozen or more even, right? You also then had this transition whereby the SEC, not necessarily because of their own free will, but due to litigation and some court decisions, really found themselves, right, at a point where, hey, we're going to be approving some Bitcoin ETFs. And lo and behold, they did. So that further changed the landscape. MicroStrategy, and by the way, again, I'm generally paraphrasing Ben here. Okay, these aren't my own original thoughts per se, although I agree with everything that Ben said because I've echoed aspects of this in the past. MicroStrategy, right, then really started to emerge as well as sort of this alternative proxy for Bitcoin. You even have ETFs that are like derivatives on MicroStrategy. So you have a real menu of options, right, as it relates to how to allocate capital that you'd like to have exposed to the price of Bitcoin. Pardon me as I take a sip. We're going to be chatting for a little bit here. Okay. So, fast forward to present day. We have this menu of options as it relates to the price of Bitcoin. Where does a company like Bitfarms fit in? So, something that Ben mentioned in today's presentation, which I'll talk a little bit more about some of the other things he mentioned, but hear me out here. He said, from his perspective, and I'm paraphrasing, a company like Bitfarms should really then be a vehicle through which somebody can gain more than the price of Bitcoin by itself. right? If you want one-to-one performance with Bitcoin, an ETF is going to be more efficient, less risky. Again, I'm paraphrasing Ben's words. So a Bitcoin mining company should really be one where you can say, hey, I'm buying shares of this company. I'm going to expect it to go up substantially more than the price of Bitcoin, right? So if Bitcoin's up, say a hypothetical 20%, you'd like to see the Bitcoin mining company perhaps be up 30%, maybe 35%, 40% or higher, right? So that, I think, is crucial as a starting point to better understanding some of the decisions that Bitfarms is choosing to make, okay? From my perspective, that lays the foundation. Now we understand that from Ben's perspective, and hopefully I'm not mischaracterizing this, hey, for Bitfarms to have a differentiated role in the marketplace, right, as a Bitcoin-related entity, it should really be a scenario in which the Bitfarms stock price outperforms Bitcoin, right? So therefore, the decisions that Bitfarms is going to make presumably align, or at least attempt to align, with that vision of establishing an operation that enables the shares of Bitfarms to outperform Bitcoin. So, for example, when Ben mentions today that from his perspective, the window is closed to buying more Bitcoin mining machines, and that Bitfarms is not going to really be engaging in that for the foreseeable near term here, I think that's very instructive, right? So Ben mentioned, hey, from Bitfarms' perspective, the real window of opportunity to buy a bunch of Bitcoin mining machines or to enter into contracts to buy them would have been maybe like mid to late 2023, right? Into maybe like the very, very early part of 2024. So that was the window. Bitfarms acted inside of that window. And so from Bitfarms' perspective, they've attempted to capture as much value as possible from Bitcoin mining as it relates to buying the equipment directly. From Ben's perspective, and by extension Bitfarms' perspective, right, presumably, hey, what we want to focus on, meaning Bitfarms, is really developing these energy assets, right? So that you can actually then have the infrastructure available for partners that are either Bitcoin mining entities or alternatively high-performance computing partners, right? HPC or AI, right? So you can have partners in either of those two camps potentially be hosted by Bitfarms. This is really interesting because in today's presentation, Ben articulated how the return on invested capital is actually going to be better, right? Arguably better in a model where Bitfarms isn't buying all the machines, which are rapidly depreciating. You got to carry that on your balance sheet. You eliminate all of that. You instead develop this long-term energy asset, which is going to be something that's useful not just today, but tomorrow and into the foreseeable future. And you're aligning Bitfarms, right, in a way to be able to capture revenue from that. Now, he mentioned that the revenue sharing agreements tend to range, I believe he said, from between, like, say, roughly 25% to 40%. So if without getting too mathematical, right? Hey, if you're going to be collecting 25% to 40%, the return on invested capital is actually better in many ways, right? Because you don't have to really allocate as much capital to build a substation and to develop, I think what Ben described as like a shell. I would have to look up what some of this terminology might mean. But essentially, hey, you create an environment in which a partner can come in and co-locate, be it Bitcoin mining machines or alternatively HPC AI equipment, right? GPUs. And Bitfarms earns money, a return from that. And by sort of doing it that way, you actually take less risk and you have the potential to make more money in many ways. It's a win-win for both parties, to be clear. The partners are making out like bandits. I mean, they're arguably they're making the lion's share of the money, right? But the point is, from Bitfarms' perspective, you're being a little bit more strategically, I think, calculating with your capital. You're not just chasing machines and saying, oh, we're going to just buy more Bitcoin mining machines. We'll sell $500 million worth of stock. I think Ben even cited that as an example. Like, he's not excited necessarily, and I'm paraphrasing again, to go into the market and, raise 500 million to chase after something that, again, it just feels like after a couple of years, you're back at it again. Now, where have we heard this before? Where have we seen this basic philosophy of why not develop the energy assets, right? And then have that be an asset that's useful today, tomorrow, and into the future? Well, we heard that with Stronghold Digital Mining. And needless to say, right, hey, Bitfarms is acquiring Stronghold Digital Mining, so it makes sense that Bitfarms, right, is saying, hey, you know what, there's something to this. Yes, we want to hit our Bitcoin exahash milestones, which, by the way, as to why Bitfarms' stock price is trading where it's at right now, if I'm understanding Ben correctly, from his perspective, he doesn't really feel as if though it's because, they're not announcing these, radical growth initiatives insofar as like expanding to 40 exahash or 50 exahash or a bazillion exahash, right? And buying all these new machines. He feels it's more a function of not having hit the 21 exahash milestone. I believe that was the milestone, the goal for year-end 2024. Pardon me as I take a sip again. So, for those of us, right, who follow the price of, Bitfarms stock, I think that once we get to a point where the 21 exahash is out there, I think there should very well be a re-rating of the stock price. At least that's what I'm kind of like informally inferring from Ben's analysis of the situation. Okay, so getting back to our discussion of like where Bitfarms is going. They want to hit 21 exahash. That's fully funded. They will be going into the market to raise some money to finalize the Stronghold acquisition. The CFO of Bitfarms spoke briefly, well, a fair amount, more in the question and answer period. And he said that really there's just two questions now that the SEC kind of sent back that they need to answer, and that pretty soon I think it was like a Form F4, it'll become effective, and essentially the acquisition of Stronghold, they think it'll definitely happen now in the first quarter. And I have no reason to doubt that. I mean, it really does seem to be on track. So the next goal would be to basically take the substations, without getting too technical here, that exist at Scrubgrass and at Panther Creek. Remember, both plants, let's just average it out, they produce about 80 megawatts, right, of nameplate capacity in terms of the waste, mine waste to energy, purpose-built facilities that exist at both locations. They can produce, say, like 80 megawatts. The substations can actually import 80 megawatts. So at each site, you can have 160 megawatts of energy coming in to power data centers, HPC AI, what have you. Add those two together, if my math is correct, it's about 320 megawatts? If I understood Ben correctly, the 320 megawatts that they could essentially turn on and really fully activate at let's call it the Stronghold Digital Mining assets, Scrubgrass and Panther Creek, that basically matches what Bitfarms has in the way of energy capacity right now. So it's like doubling to 600 plus megawatts? That's pretty interesting, right? the thinking is that you could get about a gigawatt total of energy in Pennsylvania, not just from the Stronghold acquisition, but also from the Sharon, Pennsylvania. Put all those together, I believe the number was close to like a gigawatt. It's not going to be overnight, but clearly you can start to see where the company seems to want to be going here, right? So what does this mean for us then, right? What does this mean for like a Bitfarms shareholder if you happen to own shares of the company? What if you're a Stronghold Digital Mining, shareholder? You're like, hey, do I want to hold on to this? Do I want to stay invested in this name? Do I want to move to another name, right? There's something else that kind of like makes this interesting. So Bitfarms is somewhat unique in that it has adopted what it describes as a synthetic HODL strategy. So you mine Bitcoin, you create the Bitcoin, you sell the Bitcoin, right, to fund operations, but you can then, using a variety of like options contracts and other financial derivatives, you can essentially keep the upside, right, by again, through this synthetic HODL. You're not actually HODLing Bitcoin itself, but you've got exposure to the upside of Bitcoin through these option contracts. And Ben described an instance relatively recently, he described it as not being that material of a transaction. I mean, sure, for a company their size, it's not material. For an individual, it's like these are huge sums, where I believe he said they sold some out-of-the-money calls, I think with a strike price of like $110,000, maybe $115,000 for the price of Bitcoin, collected the premium. Bitcoin, of course, the price of Bitcoin kind of retreated, and they were able to capture a profit. And Ben was like, hey, we were going to sell the Bitcoin anyway to fund operations, but hey, by doing it this way, we kind of generated more revenue. I thought it was brilliant, but I also, in my mind, thought, wow, we're kind of getting into the realm here of being almost like a derivatives trading house a little bit. So evidently, pardon the sip, there are about 12 strategies that Bitfarms has codified, or at least they're largely in the process of codifying, to remove, really to just make it more of like an algorithmic type of trading system of sorts, so that you're taking subjectivity out of the equation, and instead you're going to have, what do you want to call it? Like almost like a trading system built into the company that will be able to go into the market and presumably and hopefully execute trades that will be a net benefit to the company. That could very well be, talk about differentiation. I don't know of too many other Bitcoin mining companies that I can think of that seem to be developing some sort of like derivative trading strategy built into the company. So I'm seeing things that are very, very interesting and that I genuinely believe have the potential to create a financial engine within Bitfarms that can produce results which then in turn can help propel the stock price in a way that would be more advantageous than simply owning Bitcoin by itself. Thereby, going back to what we started our conversation describing, thereby having a scenario in which Bitfarms can once again stand out, create a uniquely differentiated opportunity for capital to be allocated to, so that you can actually then get a better return, hopefully a better return, than simply investing in an ETF. It's a lot. There was a lot discussed in today's presentation. I will certainly link to it in the description of this broadcast. I elected not to want to give a point-by-point rendition of everything that was said, because for that you can just check out the presentation. What I want to emphasize and highlight is the thought pattern that Mr. Ben Gagnon, right, appears to have as it relates to how he perceives Bitfarms, within the larger ecosystem of Bitcoin mining companies. His view, right, of the history of these types of entities, their relationship to the price of Bitcoin as proxies, and how now he appears to see a Bitfarms as being really a mechanism through which to potentially earn a greater return than Bitcoin by itself. And with that as the foundation, now we start to layer on top of that these various strategies. We want to make sure we're not chasing after Bitcoin mining machines during inopportune times. Therefore, we locked in the 2023, early 2024 bargains, right? Hey, we don't want to develop all these energy assets merely to then have to go into the market and buy a bunch of machines to fill up all that energy. Instead, what we want to do is we want to position ourselves very strategically. In a world where energy consumption keeps going up, we want to position ourselves to actually be a partner to the, Microsofts, the Googles, right, of the world that want to create data centers. Ben even pointed out, he's like, I don't know that we could necessarily get a better deal on NVIDIA GPUs. Why would we want to go into that market and try to buy these machines ourselves when we have something that everybody needs, which is the energy? He pointed something out. I don't want to get off tangent too much here, but he pointed out, and it's true, the compute part of all of this stuff is kind of easy, relatively speaking, right? You just buy a bunch of machines. But how do you energize it? See? HPC AI, awesome. Yes, let's get a bazillion NVIDIA GPUs. Let's get all the all the machines and infrastructure that we need to actually do the computing. But I need a plug. I need a way to get this stuff energized. And therein lies a tremendous opportunity for Bitfarms to be a partner, right, to these entities. Why compete with them when you can cooperate with them and create the environment in which all of these machines can operate? So I do see HPC AI and Bitcoin, machine hosting as being a part of the story, right? Certainly hitting the 21 exahash milestone, it's going to be a big deal, right? I was very impressed. I was very impressed and very, I came away thinking that the stronghold DNA of sorts, a little bit of that stronghold DNA is going to live on now in Bitfarms, right? This idea that we have these energy assets that are doing wonders, by Pennsylvania in terms of the mine waste to energy component of it, a really big deal to me. And yet we're also, right, going to be emphasizing this idea, which to me has always made sense, which is, hey, look, let's develop the energy. Let's develop all the plugs that so many other companies desperately need to plug in their applications, right? Be it their Bitcoin mining machines, be it their HPC AI equipment. And yes, Bitfarms will still have a material role to play in the Bitcoin mining sector vis-a-vis its own mining operations, as well as its synthetic HODL, which is augmented by these 12 or so strategies that are being codified or are largely codified to really turn this ideally into a profit engine. I find that to be really, really fascinating. And I'm not even mentioning energy trading. That's yet another potential revenue source, which we who have been a part of the Stronghold digital mining family, we know quite a bit about that, right? We know what it's like to be able to sell into a very, very lucrative energy market. We know what it's like to be able to do a lot more given the fact that we own our own energy assets. It's just the keys of the kingdom. It really, really is. So where do I see Bitfarms going from here insofar as its stock price? If the company is able to execute, if the company is able to get its exahash online, which Ben mentioned, hey, you know what? You had some construction delays. I mean, look, I understand. Stuff happens. I get it. But to the extent the company can execute, get everything online, start hitting these milestones, I really do believe Bitfarms has a tremendous, tremendous opportunity to be a very differentiated player in this space. Also, finally, Riot. What's going to happen with Riot? They own 20% of Bitfarms. They wanted to acquire Bitfarms. So, the agreement that exists between Bitfarms and Riot is good through, I believe, May of 2026. So for the foreseeable future, I don't think Riot's going to sell any of their shares. They certainly haven't as of yet. As was pointed out in today's presentation, hey, Riot's a publicly traded company. If they sell shares, they got to, make a filing. There have been no filings. Therefore, one can, I think, very rightfully presume there's been no sale of shares of Bitfarms by Riot. Will it potentially make sense for Riot in a year, maybe year and a half, to say, wow, Bitfarms has hit it out of the park. There's no way that we can offer some really low ball number. Maybe we got to come up with a bigger number. Hey, my point in sharing this is, I've said this before, I'll say it again. I do think the industry probably is ripe for consolidation. If you went back to having maybe 3, 4 really massive entities, multi-gigawatts of energy, spanning the horizon from Bitcoin mining to HPC, AI, you can really, I think, have some phenomenally differentiated investment plays than just, an ETF, right? So for that to happen, though, for Bitfarms to be a company that we can say, hey, you know what, energy assets matter, Hut 8, to be fair, being another one of them, because I think they own now, 2, 3 different plants. I don't know much about Hut 8, but to be fair, but Bitfarms is really, I think, in a position to really crank it up, to really turn on these assets, to really show the way of the future, not just for Bitfarms, but really probably for the whole industry. So, with all of that said, my friend, check out the entire presentation if you'd like in the description below. But as I said, Ben, if you're watching this, great job today. Same thing for, Mr. Lucas, forgive me, Mr. CFO. I've yet to fully memorize your name, so I don't want to get it wrong. The entire Bitfarms team, the people who weren't seen today, everybody who helped prepare the presentation, amazing job, really. Okay, everyone, let's stay positive, let's be great, and let's end with a quote, which I nearly forgot. There is no one giant step that does it. It's a lot of little steps. That's by someone named Peter Cohen. There is no one giant step that does it. It's a lot of little steps. And you know what? The reason I chose that is because I think that's very true for Bitfarms. It's not going to just be one news release, one site, one project. It's going to be a bunch of little things that cumulatively create the Bitfarms that I truly, truly want to believe can stand out from the crowd and whose share price will no longer be under $2 a share, but instead be much, much higher. Okay, let's stay positive. Let's be great. We'll see each other again tomorrow.